Welcome everyone to the farm tax webinar. Tonight we're discussing farm sales taxes and exemptions with Andrew Brandon. He's our farm legal specialist from NC State University. So I'm going to let Andrew take it over. Thank you, Andrew.
Debbie, thanks. Hey, everybody. My name is Andrew Brandon. I'm going to talk this evening about sales taxes in the farm production and selling context. So the questions that we're going to deal with tonight, I mean, there are taxes throughout the various places in farming. Tonight, we're going to talk about sales taxes from two perspectives. One, when you're selling something, what is the sales tax that you're required to charge the customer, collect, and remit to the county portal? Or if you're buying something as a farmer, on what items when is it possible for you not to have to pay the estate tax on the sales tax, sorry, on what it is you're purchasing? And we'll talk about the qualifying farmer certificate at the very end. And so, without knowing what's coming next, yeah. So here's what I want to say about this presentation, folks. I had NCDOR, a fella over there, look over my shoulder on this. I started talking or started researching sales tax issues in North Carolina, addressing questions from the field, from farmers, from folks about some very detailed stuff a couple of years ago, and have been learning a lot about it. It is, I'll say, a challenging topic. And I wanted NCDOR, it's like I have this hotline to NCDOR about property taxes and sales taxes to guide me that I'm in the right ballpark here. And so in a way, they are the regulator and they know the answer for a specific situation. So I put this slide up here. I had a conversation with the fellow last week. We went through the presentation. We're talking about various things. And one of the themes that emerged in our conversation is there's reality versus their legal authority to do this and that. And from my perspective and extension, I tend to approach topics from what is the extent of the state's legal authority? What can they do? What is it possible that if they wanted to, ding you for something that they caught you doing, do they have the proper authority to do that? And they're not just making up something and calling you to task. And a lot of what this gentleman said was there's a reality. There's so much, there's only so much that they can do. But he was describing times where when they discover something, I'll give an example. He was talking about roadside stands on the way down on 70 down to Emerald Isle, down to the beach. And one of their auditors one time stopped. They were going to the beach and they stopped in and they noticed that that there's all these items and they're also selling bananas, which are obviously not grown in North Carolina. At least these weren't, and they weren't collecting tax on the items. That's my understanding of the scenario. But that said, is that discovery sort of led to maybe we better take a look at make sure that these operations, these roadside stands leading down the beach are properly collecting and remitting tax. So just an example of that things are discovered, but he said the reality is they're not necessarily sweeping through farmers markets and raids and saying, hey, let me see your records. But I'm going to talk about the records. I'm going to talk about what's exempt and what's not exempt. But here's a number for you. And well, I can't do anything with that. Sorry, Debbie. Full screen view is difficult to advance on these Google slides.
Well, if it's easier for you to do it the other way, that's fine.
Oh, thank you. Thank you. There we go. This number right here, because I can highlight stuff and I can hit links and it's going to be a much better experience for everybody. This number here, take it out of the presentation. That's your number to call. And here's what NCDOR can do. They've got various levels, and the people, at those levels, I only know of level 1, 2, and 3. There might be something higher. But on the phone, for scenarios, pick option 3, and you might end up talking to this fellow that I'm talking to, and he'll give you, they'll give you the view of the department. It's my understanding on the situation about, you know, what you should be collecting on a particular item and things like that. That's just a verbal, you know, it only applies to your situation. And it's not in writing. And so it's not something you say, well, I spoke to this person and they said. That never is where you want to be. If you want a written determination on an item that you're perplexed by, this is totally a business decision because it's $500, but they will offer a written opinion, something akin to a private letter ruling that the IRS might issue on a tax situation. And that applies to your situation. You can take that to the bank. I mean, that's your ticket out of any sort of enforcement action if you're following it. And so I'm just throwing that out there because this presentation here closely, you know, he went through it with fine-tooth comb and told me where I should update things. And one thing that I did discover, and it only just came out, I'm gonna be referring a lot this evening to this document here. It's called the Sales and Use Tax Bulletins. This is what NCDOR publishes each year. This is the latest draft from the 2023 legislative session. And so it's I can't tell them how many pages are looking at this, but it's 300 and something pages. I mean, and so what I'm going to do throughout the presentation is just pull up some places where I'm referring to it, and we can read the language together, because that's really the authority that all this is based upon. I wanted to mention this because there's a challenging question that comes up to me, and I know there's some folks on this call that we're in discussion about, you know, crafting an answer, and that is marketplace facilitators. Think Amazon, think eBay, think you know, entities that are selling you know, product into North Carolina online. Now, before 2018, and South Dakota sued the Wayfarer, I guess it's a furniture group, about this issue, and the Supreme Court weighed in and came up with some guidelines. And the bottom line is, if you're one of these major marketplace facilitators, you're having to collect this tax. This, in some ways, this is because of this case, North Carolina has a surplus right now. Before the pandemic, weren't collecting sales tax on a majority of the purchases. During and after pandemic, collecting a lot of money, and that's been a very good thing for North Carolina. The question that I have, though, is because North Carolina General Assembly has passed the Marketplace Facilitators Act, and again, that's requiring the collection of tax. And the question I have is for anybody who's aggregating sales and the money's changing hands at the farm level, or in this, I've had this question about aggregators down near the coast, some way CSAs are structured. I just want everybody to know this is something that we're working on trying to figure this out, but always happy to take direct scenarios and try to analyze those. And I know there's somebody on the call that has one of those in my inbox right now. But just want to put that out there, that a lot of this, from our perspective, extension, we're kind of working with and hoping to better understand and be the mouthpiece for our regulators on how how things are structured. So here's what we'll talk about tonight: how are sales tax applied generally? When is a produced item exempt? The producer versus retailer distinction, which has everything to do with whether that item is tax exempt. A little bit about record keeping, some of the farmers market basic responsibilities. This is how this question came through my transom, was the questions about, you know, those folks that are actually sort of managing the farmers markets and what are their responsibilities. Some non-food stuff, and then we'll talk about the qualifying farmer certificate at the tail end. Sorry, Debbie, I threw this slide in there because I wanted to emphasize something with it. This came from a presentation I just threw it in last weekend. I think a couple of weeks back, y'all did the Schedule F workshop with Guido. I put this out there because it's really for the purposes of exemptions in agriculture. And I would say particularly present use value, the bona fide farm zoning exemption, whole nother webinar, and the qualifying farmer certificate, that should be QFC. This is the gold standard to prove revenue, to prove what you brought in. Reason being is because the lying on your tax return is the highest, that's a federal crime. And so at the state level, I tend to think that county zoning administrators, county tax administrators, NCDOR are looking at Schedule Fs and saying, yep, that's prima facie evidence of what that farm produced, because they're not probably not lying to the IRS about it. So I'm just throwing that out there as the gold standard, but that's the Schedule F is your standard filing in farming. So food defined. This definition is important because the amount of tax that you apply to a product is going to depend on whether it's food or not food. And when we talk about food, we're going to go from food to when the food has been value added. I was warned by my contact at NCDOR to stay away from the term processed food, because I was thinking, we process a live animal into cuts. That's a way to describe that. But processed food could also be something cooked steak, which is going to be taxed differently too. So I'll go through these distinctions, but when I say food, the reason we have a common definition is that the qualifying farmer certificate, which allows for you as the producer not to pay sales tax on the inputs that you purchase. Other states do that. We're one of, I think, 13 what we call streamlined states, where all these states have common definitions. And so it helps producers that have to cross the state line be able to easily qualify for an exemption on purchasing items across the state line. They might have to get a certificate in that state, but that's something that they're able to do. And so a streamlined definition of food is important because, again, food is the thing that's going to be taxed at a lower rate. And I'm giving away the big reveal here that generally food sold in your grocery store, really anywhere, not prepared, not cooked, is going to be taxed at 2%. And I'll try to show you where that 2% comes from. But if it's prepared food, I say unless sold by its producer, and I'll go through that. But if it's prepared food, meaning it's heated, served with utensils, whatnot, it's going to be taxed at the applicable state rate plus the local and transit rate, and I'll show you what those what those rates actually are. So yeah, sales tax generally, I have links throughout this because I'm always wanting to know what is the authority for this. And so these are the questions asked. Is the sale of this item going to be subject to the general tax rate? And in North Carolina, at the state level, by statute, we've established the statewide tax rate as 4.75%. Well, through various, as far as I could tell, 3 echelons of statutory updates over the course of several decades, the North Carolina General Assembly gave authority to the counties to hold referenda in those counties, and these are done decades ago. I mean, over a decade ago. I'm not aware of any county that's done one recently, although I'm not saying that hasn't happened. Some of y'all may be well aware. But each county is authorized to charge what we call a local and transit rate. And this was something that was important to keep adding, is that term transit rate, because think peri-urban counties that are somewhat benefiting from transit systems attached to the municipalities that they're surrounding, things like that, and they might be collecting an extra little part of a cent in order to just pay the costs. And so if you're paying something that's at full bag, it's going to be 4.75 plus your local and transit rate. If the item is exempt from sales tax, nothing. But if it's food, generally it's going to be 2%. And so I say here, and I probably have it later, where this 2% comes from is, I don't think this, I just said all this, but this doesn't quite get us there. But forever I was looking, where does the 2% come from? I can't find it in the, in any sort of statutory authorization. What it is, it's the last of these local tax authorizations that the General Assembly gave the counties. And it said that this particular authorization said, this may not be applied to food, and something else. And so what it is really, it's by operation of subtraction, you end up with a rate of 2. And that pretty much applies in every county across North Carolina. I did link to, and I think this is the most, this is 2022. I think this is the most recent one. But when you pull up this link and you see what all the different county tax rates are, think for Alexander County, think 7 minus 4 what did I say it was? 4.75. And then that will tell you what your local rate is. But then again, that's more than 2%, right? So some of that local tax is not, the counties are not allowed to apply it to food. So just that's how you get that 2%. If any of y'all were, curious about how that happened. Debbie, I hope it's okay that I just admit people pop up. And so I did a little, just a little calculations just to kind of illustrate and what that looks like. So North Carolina has this statute regarding specialty markets, and technically farmers markets are specialty markets. That said, and so as such, the market itself, whether it's a flea market, auction, some sort of auction type thing, or farmers market, is responsible for keeping registrations or for having a list of vendors and their registration numbers, which I'll get to. But also that's the primary vehicle for folks that are selling in these markets about whether or not they're selling exempt items or whether they're selling items that should be taxed at the full state and local plus transit rate. So this is not something that you as farmers need to particularly worry about. It's really more about the folks that are operating the markets and what they should be concerned about. Yeah, this is probably a bit more detailed than we need to go into for our purposes this evening. This is really just driving home the point that farmers markets are considered specialty markets under these under this particular statute. Farmers market responsibilities. I bolded some things here. This is just so you're aware as a vendor about what they're required to do. Must maintain a daily registration list of all the vendors. Must require that each vendor exhibit their certificate of registration for visual inspection. Now, I don't want to get ahead of myself, but there's a question that comes up often about, well, what if I'm just selling my own product and I'm fully exempt? True, yeah. There isn't a technical requirement that you even need to register for sales taxes. I asked this question to my person over at the NCDOR and said, yeah, you're right. But it also it's helpful in the event that they do get audited and they're able to prove that all their sales are exempt, something to that effect. But if you're at a farmer's market, these are the requirements. You're at a specialty market, and so these are the requirements that you're generally needing to meet. So I know I just threw a gray area question out there, but my belief in all this is that that you might as well go ahead and register, even though you're not having to collect taxes, because your ability to show that you are exempt from taxes is purely going to be based on your own record keeping. I'll emphasize this a little bit later, but the default is that if you don't have records showing the origin of the items you're selling, you're responsible for the tax. And so That right there is something that may be more than what people do, but particularly when we get into aggregation and we're selling other people's products, that's when it becomes super duper important. But anyways, these are just some other things that the farmers markets are going to require. And as I said, I just copied this straight out of the statute. But one thing the farmers markets aren't keeping is your sales records. That's all you. I don't know a market that's interested in getting into that. Wants to, and I'm not sure I know any farmers that really want to be handing that out either. So, but those are just the pieces that I pulled out of the statute for emphasis there. So farm products exempt from sales tax. Here's the short of it. If you are the producer of the item, of this food item, and this is, well, I'm gonna leave it at that for now. And here's how I describe it. Now, I pulled this out of this is straight out of the general statutes. And this is what they call the agricultural group. And you see here, I've just listed, some code number sections. Section 3 of that right there is forests and mines, the products sold in their original state. So timber buyers not paying sales tax on the amount of timber that purchased from a parcel of land. Here's us. Products of a farm sold in their original state by the producer of the products, if the producer is not primarily a retail merchant. And that I want to emphasize there, because I'll break it down here in a slide or two, but that is the distinction, whether you're considered a retail merchant selling something or a producer, that determines whether or not you need to be collecting the 2% food tax on these items that you're selling, wherever it is you're selling to whomever. And so you see the fish and seafood are also part of that, but that again is wild caught, let's say, fish that's sold by the boat, that's sold by the person who caught it, not sold wholesale to some place, and then that fish market is selling it. They're not the producer, they're not the catcher of that food, and so they're going to be required to charge a sales tax on it. The way I try to describe this, or the way that my brain has gotten around it, is that when we talk about food we talk about food that's produced by its producer, and again, I'm not going to use the word processed. Value added, perhaps, is the term that we should use tonight. I look at it as a single ingredient. It's like, if you can look at the food, or you can look at whatever it happens to be, if you've made a mixed salad or something like that, or if you've put seasoning in it, it could be exempt if the seasoning was produced on your farm, which is certainly not impossible. Salt, probably not produced on your farm. Pepper, likely not. But while it is possible, generally when you get to a place where you have a product that the primary product that you produce, but you've had to add things to it, and it's not its single ingredient. That's how I tend to look at it. It's a single ingredient that you produced and came from your farm. That's when, if you're primarily a producer and not a retailer, that's when you are not having to collect sales tax on those items sold. So important distinction there. Where I go to here is that exemption applies only, again, if you're considered primarily a producer. And when your status changes from a producer in the eyes of sales tax collection, is that if you regularly exceed 50% of your total dollar sales selling items that you did not produce. And just sink in for a second, and you're like, well, what does regularly exceeds mean? That's a great question. I have that exact same question. What I got back from NCDOR about that is that you're making your decisions in your first year of operation. You have your records, obviously. And I actually have done that, so I don't need to have that in there. That in the second year, that's when your actual records are going to be much more relevant, because you're having essentially, if questions are asked, if you're audited, you're having to show them that you did not, over, let's just say 51% of the calendar year, you did not exceed your sales of products. Your 51% of your sales weren't items produced by other people. And so if that happens, if your record suggests that, then you become a retailer, and then you lose that I produced this tomato, I don't have to charge sales tax exemption. Even if you produce the tomato and it turns out that you're regularly selling over the calendar year of the season more products that you didn't produce than products you did produce, you're going to have to charge 2% for that tomato, or you should have been charging 2% for that tomato that you produced. And so this is the important distinction that I mentioned earlier about retailer versus producer. And so again, it all goes back to record keeping. Just a little bit more detail on that same thought, but again, the burden of record keeping is going to be on you as the seller. That applies across the board for really all exemptions in agriculture, really a lot of requirements and exemptions in law, is that the regulators, those who are asking the question about whether or not you're collecting tax, whether you're paying the proper tax, all that, are not taking anybody's word for it. They're requiring proof. And so it is a burden of proof on the taxpayer, so to speak, to show that they are qualifying for this exemption. And so later in the year, when you hear about deductions, or you're hearing about whatever Guido was talking about in the Schedule F, again, burden of proof always on the taxpayer. So I just wanted to emphasize that here, that's going to apply to you. So I think I had a slide in here that a lot of words yeah, here we go. It's done location by location. And so, yeah, here's where I said it. So each location is going to be calculated separately. I don't have an authority citation for that, but I picked that up, I think, out of the sales and use bulletin. What it means, if you're at a number of different markets, your regularly exceed is not going to be your aggregate sales across all of your markets. It's just going to be by, let's say, if you're selling in Person County market, you're selling in Hillsborough, or you're selling in Durham, your regularly exceeds records are only going to apply to those particular markets. So it may not have happened up in Person County, but it may have happened down in Durham County, depending on, you might have had some relationships down there that you were selling other products not produced by you. So just that it's done market by market, location by location. Yeah, just again, sort of driving home these points. I did make, put some of these in red. Without the records, all sales are going to be subject to the general tax. So it's something that you've got to be very, very careful about. Remember, from the state's perspective, they don't know what it is you're selling. You have to be able to prove these are the items that we're selling, and this is the nature of those items. A raw food product, a value-added food product, prepared food product, whatever it happens to be. So again, I'm just sort of driving home this, I guess, ad nauseum, record keeping. This is just for the farmers markets. I think I've already pretty much gone through this. Maybe I should have removed this slide, but I put a couple of scenarios in here, and these scenarios speak directly to the producer versus retailer. And I hope my math is correct in all these, but I have Paul. He sells produce, just straight up. He's got a stall at the market, and he's selling. And I'm just making up figures, but he's sold $1,000, and these are all vegetables he produced. These are all items he produced on his farm. And so as such, because that's all he's sold, that's all products he's produced, he's primarily a producer. And as such, all of those sales are exempt from sales tax. So he's not collecting a 2% sales tax on those sales to each individual customer. He's not having to do that. But let's say that Paul goes to his neighbor Ringo and says, "Hey, you know, I didn't. You're set up for blueberries. How about I sell your blueberries at my stall?" Ringo says, "Fair enough," and he sells, you know, let's say wholesale to Paul some blueberries which are resold at $300. And so note that these are blueberries from Ringo's farm. Paul's yesterday farm did not produce these blueberries. And so Paul is going to have to collect a tax of 2% on those sales, which total up to 300 again, as you know, as they're happening. And so I just did a little bit of math here about the producer versus retailer and said that sales of the product, you know, it's just 1,000 plus 300. He's not a retail merchant. He's still, the majority are his products. Now that's, you know, like duh, but put this on every Saturday throughout the season during the year, and you see where record keeping is going to be very, very important as products come in, products that you may be selling for somebody else and whatnot. And so I just state here that Paul must collect from the customers and remit 2%. It's only $6, but there you have it. Here's the point I want to emphasize, that Paul must keep records. Now, in order to prove this, to prove to NCDOR that he's not regularly selling other people's items, let's say this is the same scenario throughout the season, and this is just what it amounts to. The only way to prove that is that Paul's keeping separate sale records of what he's selling that he produced and what he's purchased and is reselling from Ringo. Now, the question is going to come up shortly. I know I put a slide in on this, and that is, well, yeah, what does that look like? I don't have that answer yet. There are probably a bunch of y'all in this call that you know I'm assuming that y'all are all doing this, and so you have your own systems. There is a way, of course, that you can set this up in your QuickBooks if that's what you're using. And I've not done that. When I was running my own business and had QuickBooks, I wasn't collecting sales tax because I wasn't required to. But you could do that, and it's a setup. I put in some YouTube links to work through that, but I don't know how to set that up. Let's see, aggregating product. So I changed this a little bit and added some more product from John's Strawberry Fields and George's Jelly Weeping Farm. And so I'm just trying to take us to this place where you see Paul is starting to aggregate more product and sell through his stand, and he's starting to exceed this. This was just one time, but let's say this is something that's going on throughout the season. You see that he is regularly exceeding 50% of his sales with other products that are just by 6%, but still, but products that he did not produce. And as such, if let's say in year 3, Paul Paul is audited, and he has to prove that, yes, I was only required to collect at that on that particular day $46 and remit that. That's all I was required to do, even though my total sales were $2,300. He must prove to NCDOR that indeed that's the case. Well, no, in this scenario, I have him exceeding it. So what's going to happen here is that if he's regularly doing this, the NCDOR's position is going to be that even the items that he would have been exempt on, if he had not done this all season long, if he had been exceeding this, the 50% selling more products from others than you are of yours, if he's regularly exceeding that throughout the season, again, the regular exceeding is not broken down to days. NCDOR is well aware that we have seasons, that there's, that they're, it's not 365 calendar day type thing. It's really when you're, how many events are you at the market? How many Saturdays? And so in this scenario here, I have him having to pay a 2% tax, assuming these are just, again, this is food, on all of the food if his records show that he's been doing this. He's going to have to, and if he doesn't have any records at all, well, then as I mentioned, the position might be that the NCDOR doesn't know what he was selling. Now, are they going to come down hard? I don't know. That the general idea I was getting is what NCDOR is looking for from folks is making good business decisions. That's what my contact kept saying. He says everybody's going to make their own business decisions about what they do, but that you're trying as best you can to understand the sales and use tax bulletin, and where you find a place that you could be doing better or something like that, you're taking steps to do it. They're not out there to shut people down, but they have to apply this law evenly across the board with everybody who's selling something in North Carolina.
Andrew?
Look, Debbie, pause right there. Boom.
Oh, good, because I was gonna break in there.
Yeah. Well,
we have perfect. So we do have a few questions, and if y'all have other questions, go ahead and put them in the chat, please. Let's see. I did not understand what he meant on e-commerce. How about an online shop to sell produce?
An online shop to sell produce.
So we have lots of farms that do offer, you can shop online, but that's what I would consider e-commerce.
Sure. I wish I had that answer coming into this. I don't want to give the wrong one. If I wasn't worried about what the market facilitator, no, you're not a market facilitator because you're selling your own product. Duh. Yeah, I'm going to say that the manner of sale there, that if it's a product you produced, you're setting up your shopping cart to where it's not collecting sales tax on that item that you produce that you're selling.
Okay.
That's going to be my answer. I hope it's right, but I think that's it. Now, if you're selling for other people, again, these other scenarios are going to apply. And again, that market facilitator law, it was meant to, require any of those big sellers from other places selling product here to be collecting and remitting sales tax. The question that you just posed about your own farm's e-commerce site, I'm pretty sure that it would be the same as if you were selling your own product at the farmer's market.
Is there a CSV file on the Department of Revenue website for rates per county?
Not a CSV that I found, but that link I pulled up earlier has them. And again, you can pull that's right there on just Google that.
Well, that's one of the links they're going to get in the follow-up email. Yeah, that gives them the links. Yeah.
And again, remember, what's your county food, your county food rate, if it's I'll get into these distinctions here in a little bit, but your county food rate is always 2%, unless it's exempt because you're its producer and you're not a retailer, or is prepared. And then it's going to be Bertie County, it's going to be 7%. It's going to be the full state rate plus all the local and transit rates. But for intents and purposes, all food that's neither of those two things, neither prepared nor exempt, is 2%. And so that's, again, the 2% is calculated by subtraction by the counties not being authorized to build part of the local transit rate, something like that.
Okay. What is this? Okay, I'm sorry.
No, go ahead.
What is a certificate of registration?
A certificate of registration, I'll have a link for that later. That's just something that you can go straight to the NCDOR site and register. And what that is, it's getting you your number. So if you do have to collect sales tax, it's basically how you're accessing the portal to pay the taxes.
Okay.
You're going into the portal, and I've not, like I said, I've not operated myself, but my assumption is that there's a window in there where your money from your bank account is going to go into NCDOR, our tax coffers. Woo-hoo. So what else?
Do agritourism sales push you into the retailer classification if these fees are greater than your raw good sales?
Goodness, that's a great level 3 question. My take on it is going to be that to the extent that you're charging sales tax on agritourism fees, yeah, I mean, yeah, again, I'm giving a technical answer based on my reading. There isn't anything in there that says no. So I think that's a possibility. The answer there is yes. So your fees, to my mind, you're charging the full county rate on that. Full state income.
Yeah. Some of these questions are a little hard when they're not quite in the context of what slide you're on. What does he mean by records? Kilograms sold per vegetable, seed records, fertilizer records?
Well, not fertilizer records, not seed records. Just records describing the products sold and identifying those to. There isn't a format. There's not that's the shortcoming of this is that I've not done this myself and I have a record keeping system to show you. That's something I'm normally able to do in this job with legal language on leases and stuff. This is one area where I've just not put my hand to it myself. I'm sure that there are folks on this call that have some systems they use about how they differentiate products that they've grown and products of others. The invitation I'm always throwing out there is you'll get my email at the end of this. Ask us questions because I'm interested in finding out the answers myself. So.
What about an online shop to sell flower tubers?
We're getting into specific products there. That I don't know. Online shop, are you growing these tubers? They're products of your farm.
Yes.
I'm going to say that they're going to be exempt. I'm going to do flowers here in a little bit and nursery items. I'm going to hazard you produced them if you're not primarily a retailer, those are going to be exempt. But if you are primarily a retailer, it's not food. So it would, if it's a non-exempt item, if it's an item you're reselling for somebody, to my mind, that's 7%. That's the full state plus local and transit rates because it's not food. Remember, 2% only applies to food. You can have an exemption for non-food items. One example will pop up here in a little while is firewood, so long as the trees are grown on your property. You're not getting it from somewhere else. So
that same person that's asking about flower tubers is also asking about selling seeds online that they produced. So I'm assuming the same, similar.
Good one. Yeah, I haven't. I'm guessing at an answer, and that's all it is a guess. Item that you produced. You know what I would do with that? Here's what I would do. I'd go to sales and use. I'd go seed. See what comes up, and throughout here, you're going to get numerous places where
well, we might have to move on, Andrew. We've got a lot.
I know, I understand. I just
Yeah.
want to show. I'm just illustrating, folks, that this is generally when I'm tasked with the question. This is exactly what I do. So, yeah. Let's move on.
It isn't good for them to know how to search that. I see what you're saying. Yeah,
it's great. It's the manual. I mean, it's the manual for all of this stuff.
Okay. Yeah, just knowing that they can search it is good.
And
how would a salad mix be treated? As in, you grow 3 separate varieties of lettuce, harvest them separately, and then mix them before packing.
Yep, my position is that so long as those 3 lettuce varieties, greens varieties were grown on your farm, even though you mix them together in a mix, they're all grown on your farm. Once you add something to it, shake, that comes from something that it doesn't come from your farm. The example that I've always used, and I don't know if I got this from the sales and use manual, but it came from somewhere. And that's really been my only source, is that let's say you chop up some, kale and you put seasoning in it in a baggie and you sell that. You've just value added that with product that wasn't grown on your farm. Now, if you can totally make the case that every ingredient in that seasoning came from your farm, then okay. But burden of proof is on you. But if it's got salt in there, again, items that are general seasonings that you didn't produce, that's going to take that item there to 2%. It will be non-exempt.
Assuming fresh herbs you produce are exempt, are dried herbs you produced also exempt?
Yes.
Selling raw meat from animals I raised that was seasoned or value added by the butcher need to be taxed?
We'll get there.
Okay, we're going to cover that later.
We're going to get
Would I automatically be a retailer if I'm also selling products more than 51%, such as handmade soaps? So then when I sell produce I produce, I would automatically need to charge 2%?
If the sales of soap, again, regularly exceeds, okay. Here's why that question just became challenging, because you're making the soap. It's a non-food item. It's taxed, to my understanding, at the full 7%. But you're producing that soap. That's a good offline question to ask.
So email you for that one?
Yeah, email that one. That's a really good one.
Okay, y'all have his email address. Okay. If one vendor is I don't mean to hurry, but we got a lot of questions. If one vendor is routinely selling products for another farmer who doesn't have personnel to send to the market, would that be considered a retail arrangement? Would sales tax be required on those products that are produced on the other farm?
Yes.
Okay.
I'm saying that just on the straight logic of if you produced them, they're exempt.
Yeah. Would a blended tea comprised entirely of homegrown herbs be considered a prepared food? Gosh, but this is getting into like,
I will say this, the word prepared for that is not, it would not be prepared food.
But it does get into the realm of the Department of Ag. When you start doing things like dehydrated foods and things like that, they want to be involved usually. So that can get complicated. Even things
right. But from a sales tax perspective.
Yeah.
All of it's going on your farm. That again, that's another good email question, because we're going to get into, even though you grew a chicken on your farm and you sent it to the abattoir and it got cut up, even if you cut it up on your farm under an exemption and put it in its packaging, I think at that point, once it becomes a non-live animal, you can, as a producer, you can sell live. I'm just using this as an example. You can sell live animals, and theirs are tax-free. But once you kill it and put it into cuts, that changes the nature of it. And I'm wondering if your tea example does the same thing, but I don't know off the top of my head. I should have
Jared, I don't think that's a question that you have. Was that a comment? You can speak up. I don't really see a question there. Or you can type it or turn your mic on. Comment, got it. He said records, bill of lading from purchasing items, receipts, pictures. I think that's it for the questions for now, which is good. That was good. A lot of questions because you've got some more slides to cover.
I got some slides to cover.
Thank you, Andrew.
Oh no, thanks. I'm glad I put that in there. I'm glad the timing worked out. All right, what's next? Yeah, here's where we'll go into the different types of foods. And I was getting warned right and left in this conversation I'm having with NCDR about, you might want to kill that slide. That's too complicated. You might want to kill that slide. I'm only going to, what I was trying to assure him is that the questions that come to us, to me, to Debbie, to every people in extension, there are just all these scenarios that it's hard to not imagine that there's something going on out there. That there's a question attached to it. So I will venture there, but I won't be able to take questions on things like bakeries and stuff like that, because that's a real weedy subject. But again, just reiterating, I don't know why I said preview summary. Food sold by its original producer, exempt. Food subject to the 2% sales tax, the local sales tax, it's going to be purchased food. Again, it's sold in its original form by the person classified as, well, producer or retailer. If you buy a tomato in a grocery store, it's taxed at 2%. Food sold in altered form, value added, processed meats, sausage, spices to a raw product. Now, honey has a weird place in our laws. A lot of y'all know that honey sales for the longest time didn't count towards your property tax exemption. They do now, but how I remember the fellow saying that things like honey are not going to be, even though you produced it, that's still going to be taxed at 2%. Don't flood the chat with questions on that. That's a good email question. This is one that I'm a little unclear on. But salted peanuts, that salt comes from somewhere else. Baked goods sold, and non-prepared food sold by a retailer. And I'll kind of jump into those a little bit. And subject to the state, I said prepared foods, but I'm not stopping there. I'm just talking about food for the moment. So what is prepared food? Again, this is the definition that I get straight out of the sales and use tax bulletin. Sold in a heated state, or consists of 2 or more foods mixed or combined, and I'm saying by the retailer. Because when you see retailer, that's going to be somebody that's classified as a retailer. 2 or more items mixed by the producer. That's not what it says. And so that would be the situation where you're making a salad mix with lettuce from 3 different farms, or sold with eating utensils. I sort of said this on the fly at the ASAP conference the other week. Don't put out utensils on your farm stand. Don't do that. And napkins, you see that? Don't say, "Oh, I'm sorry you spilled that. Here's a napkin." That sounds like, it's a goofy example, but again, I'm just going straight from the manual here that says, these things are things that start to blur that line. Again, notice I have this here by the retailer. So even my guy over at NCDR, he warned me against going down this path. And so just know that when you're selling something in a heated state, things like that, that's going to cross over into that prepared food. And prepared food is a 4.75 plus local rate food. Sales by fruits and vegetables. I'm sort of had broken these down long ago, and probably should do some revising of how these are organized. Again, think of the product you can recognize. I'm saying even raw vegetables that are cut up and placed in bags, and so long as all those vegetables, the mix that you're putting in there, you're doing it for convenience. Stir fry mix, whatever, as long as all those are produced by you. And again, the challenge of record keeping is that if you are putting a certain percentage in there of products from elsewhere, whether or not it makes the whole thing 2% or just makes a percentage of it 2%, if that's your position, just remember that whatever your records support, that to me is a defensible position. And so if you said that, I put in some squash that were grown next door, not by me, but that only made up, 10% of what's in here. And again, they're not weighing stuff. They're not going in and doing, genetic testing on all this stuff. It's really according to your records and how good your records are, and whether or not you want to try to take advantage of that exemption as the producer. Because again, remember, this isn't your money. You're just charging the customer this, and the customer's adding that on to the price of the the price that you've set for the product. You're just having to take that piece and make sure that it goes to the state. And so it's however you decide to do it, just so long as your records support what you're doing. Here I've got the the little seasoning requirement. That's the adding the seasoning to kale. The reason I stopped short because I see prepared foods. Reason I'm putting that there because this is not going to be an uncommon situation. I'm going to see if the word jams is in there. It's not. Is jelly in there? Yes, it is. Not jelly beans. That's candy. That's considered prepared food. Is that all I get? Okay. Sorry for that digression, but that's a question that that I would love to get in an email. Raised cut flowers, again, so long as they aren't in an arrangement. Once you put it in an arrangement, that's going to add it, that's going to change it, and it's going to become subject to the full state and local tax. So if you're selling, just again, single variety of flour, and again, not in an arrangement, whether or not that means that, even though all the flowers come from your farm, and I know there's probably a number of flour producers on this call that are going, here's how we do it. This is the way to do it. This is what I was told, just not in an arrangement. And so once you do that, that's going to change the nature of it. But here, yeah, okay. So honey, firewood, again, so long as the firewood comes from a tree on the farm, those are going to be exempt. Because you're going to be considered the producer, even though bees produce the honey, you're collecting it. Sales tax on meat. Again, live animals exempt from tax. That's straight from the that's straight from the statute. But of course, we're selling live animals at auction barns, but we're not doing that at farmers markets, and so that's not something that's generally going to apply to you as the producer. It's just when you're selling that animal to another purchaser live, you're not collecting a sales tax on it. The purchaser's not paying an extra tax on it. Cuts of meat, just look at it this way without trying to figure out the logic behind it. Even though it was just sent away, killed, cut up, and repackaged, it's 2%. That's just that's position of NCDOR on that. I continue to search for a logical reason, even though it's still the same product, but that's their position. I say processed meat. Again, that's where I use that word that I was warned, but I'm going to say uncooked sausage, because remember, so long as heat has not been applied to it, 2%. Once you get into smoking meat, jerky, things like that, I just threw jerky in there. I'm not sure why, but that's probably going to that has heat involved. Yes, that would be something that I think is going to be full state and local and transit rate. And each slide, I've just put the latest sales and use tax bulletin in there to back that up. But that's what's in the sales and use tax bulletin. Bakeries and bread. I say careful. This is we said, hey, look, take those 2 slides out. Don't do this. I'm going to leave these in there just for y'all, because there's this weird little rule about artisan bakeries. And it all depends on their volume of sales, their ingredients they're using, this, that, all this stuff, to where they can only need to collect 2% on that food without, because it's cooked, right? Without it having to be prepared foods. But generally, there's again a little nuance in there for artisan bakeries, but my guy said, hey, stay away from all that. He said, stay away from this one too, processed salads. And so there was no disagreement on this, that this coming out of the sales and use tax manual is not what's the North Carolina's position on this. And I emphasized to him that it would not be unusual that you would have things like pimento cheese sold by a small dairy or something like that. And so just putting that slide out there, and I'm just going to move quickly on from it. Nursery sales. So the sales and use tax bulletin, this is one also that very much depends on you as the producer growing out that plant. And so once you take, if you buy nursery stock and sell it in that same season, that's, again, it's not food. That's something that's going to be charged at the full retail rate, the 4.75 plus the local. But if you are growing that out, and again, different seasons for different types of species, then if you're not, if you're holding it over a season and growing it out and then for sale, and you're selling not primarily as a retailer, again, most of the products you're selling are going to be ones that you're producing in that matter or growing from your own starts, then that's going to be exempt. And again, there's a whole section on this in the sales and use tax manual. I put something here down, but if you're all, because this is super duper common too, that even you might be producing those items, but you also have a landscaping business and you're providing those to the landscape business. Your billing to your customer is going to have to reflect those different amounts, so that one item, the items that you're producing and provide to that customer, are going to be tax exempt. But the service of planting them, of moving rock and stuff like that, that's not exempt. It's going to be taxed. Flowers, same thing. Again, the wreaths, bouquets, things like that, those are going to be subject to the full state and local rate. If you are, again, selling, and this is the way I'm imagining the logic of it, is if you're selling the flowers of the same type that you're growing, pretty sure that those are going to be tax exempt, so long as you're the producer and you're not crossing over into the retail realm. What did I say here? Unless the product comes from the product forms. Yeah, it's think of it that still it's an item that you produced. But once you're getting into arrangements and things like that, that starts to change the nature of it. Okay, here you go. So yeah, someone earlier was asking about, what are you talking about registering for? Well, this is it. So if you are selling other people's products, then you do have to be showing that certificate of registration, because you are collecting tax on those. And again, the question that comes up is like, well, if I'm selling everything that's if I'm selling everything that I'm producing and not collecting tax on it, yes, technically you're not having to display a sign, you're not having to get a registration or anything like that. I'm just suggesting that it's probably not it doesn't make you a target or anything. So when you are in a situation where you sell something that you do have to collect tax, you're going to have a registration number anyways. So at some point, if you do that, you're going to have to get one. But these are the links I put up. Debbie will provide these for you. This is where NCDOR guides you to where the portals are for your tax remittance. And also around that general area, their website's also going to be the registration number. Again, there's a because where you are selling, if you're in multiple counties, say you're in Person and Orange and Durham, you're going to be doing 3 separate tax remittances, because those sales occurred in those counties, and those counties have I don't like using the word right in government, but they have that's their money. That's going to be their money under their authority to charge it. And so there's an NCDOR video that I found that I won't pull up that says, yeah, if you're filing in multiple counties, here's how you do it. So they've got a lot of great resources on their website. Frequency of payment. Again, if you're, if you're not selling hardly anything, quarterly. Monthly, I think, is going to be where a lot of folks fall. If you are exceeding at 20 grand, then it's definitely monthly, and I think then there's a prepayment requirement. And so that's on the assumption that you've got the cash flow to do that sort of thing because your volume of sales is very high. So, but these are just the details on frequency of payment. A couple of scenarios, and I got these from somebody that manages farmers markets. I met some folks and I said, hey, would you help me with something? And I asked this invitation, I throw this invitation to all of you to provide scenarios. And again, what I might be saying is just going to be guidance. I mean, and in a way, you might as well just call up NCDOR and get to level 3 and ask them the scenario and see what they say, because of course they're the regulator. That's the source. I'm sort of just like kind of thinking these for how would I describe this in an educational publication, and that's my interest in it. So I got some of these scenarios from somebody that does a farmer's market. I just pasted it directly from the retail and threw up some really, really short answers. And so, my conversation with the fellow at NCDOR, he looked at these too, and he said, yeah, that's goat cheese. That's going to be 2%. That's cheese. Even, it's it's milk, but now the nature of it's been changed. Again, the flours depends on the arranging, how that's being done for the flours being sold through a CSA. Again, the product is, so long as it's sold through the CSA and it grew on your farm, if it's food, that's going to be that's no sales tax collected. A beef farmer sells at multiple farmers markets every week. One is a producers only market. Another allows them to resell other types of meat from other farmers, including meat. My answer there was it doesn't matter because it's meat. It's cut up, so it's all going to be 2%. So it doesn't matter in this scenario, in that scenario there, whether Paul is selling cuts of meat from his own farm, but he's selling chicken from Ringo's farm. It's still all going to be 2%. And here's where I said, my guy said, hey, take this one out. But again, these are scenarios that occur out and everywhere. So so this is, again, he was saying, well, you might get into this artisan bakery nuance, which again, I didn't spend some time here tonight fleshing out because it's a conversation that you really have to drill down on and just can't really do it in a webinar adequately. Debbie, I do another pause in here.
What? Oh, okay. We're going down the cut flour rabbit hole here.
I know, I was watching it and sort of going, oh no.
I know. Okay, hang on. Let me, I was trying to help answer a couple of the questions. Let's see. Okay. I'm a producer of single ingredient, but when I alter its form to dehydrated or powdered, is that considered value added? Oh, and then someone else answered it, said based on a webinar, yes, of value added foods, yes, dehydrated counts as value added. Yes, I would agree with that. Yeah.
Yeah, heat's being applied to it.
So I made a note just to remember to ask you this, because there's a lot of cut flour growers out there, and right. I know there's some confusion or uncertainty about distinguishing between arrangements and bouquets. And when I hear the word arrangement, I think of something in a vase, but that doesn't mean that that's correct. Right. A lot of cut flour growers sell bouquets of mixed species, and they sell them at the farmer's market wrapped in plastic sleeves or paper. So I'm assuming that would be taxed because is that considered an arrangement? they're all grown on the farm. Everything is grown on the farm. Or would those be exempt? So, and I don't know if you can answer that, but I think there's a lot of confusion about that.
Yeah.
Yeah. I mean,
I'm sort of doing a demo here.
Yeah.
Because you saw where flowers came up, it really didn't come up at all, and arrangement doesn't come up. I mean, come on.
And I can pull up an old thing I had on my website, Andrew, from the DOR, and this is what it says. Under non-farm food products, it says loose cut flowers are exempt from tax when sold by a producer. The flowers may be wrapped in tissue or similar covering and not affect the taxability of the flowers. But then here's the kicker. If the producer creates a flower arrangement, the flowers are no longer in their original state, and the arrangement is subject to the general 4.75% state and applicable local and transit rates. So the question really is, what do they mean by arrangement? Is a mixed flower bouquet the same thing as an arrangement? That's my question that we might need to track
that's the
down.
question, I think, and it maybe NCDOR isn't getting that question. They're not thinking that's a big enough question, but it's a huge question. I'm going to talk. I mean, I'm not able to answer that. Yeah, I can't make that. I don't know what that distinction is.
Yeah.
Because with my conversation, I didn't really get an answer from it, because what I think it's going to take is writing down several different scenarios of how the flowers are presented. Here's one scenario. It's a bunch of lilacs in a tissue. That's okay. That's a single, species of flower. But you put you mix a bunch of different species together, wrapped it in tissue, but you grew it all. And what about that? Well, what about you add some fronds and stuff in there, and you put it in a vase or things like that? I think what they're able to respond to, and again, what he kept saying was level three questions, is specific scenarios.
And I can work with you on this if you want, because I work with a lot of flower growers, and someone had asked, well, what if a lot of growers sell what they call grower bunches, where it might be a single species but multiple stems. And someone said, I sell 5 sunflower stems banded together. That's that considered a bouquet? And I already answered. I said no. Well, then they said, they came back and they said, well, what if I put it in a vase? I'm like, oh, well, that might be in an arrangement. I don't know. We'd have to find out. But
no, and we're now bringing in unless I guess there's more questions, but that's also a nice little segue to the qualifying farmer certificate.
Yeah, but let me finish with the other questions. But so Jen Sanford, we're going to have to just track that down. We don't know if you stick 5 sunflowers or whatever. But yes, her question is, if a cut flower farmer sells arrangements of all their own flowers, needs to charge 7.75% sales tax. First of all, I don't know what you mean by arrangement, if you mean in a vase or just a wrapped bouquet. So we're trying to figure out, is there a difference? Does DOR differentiate between those? I see some farmers selling in vases at markets, and some just wrap them in paper. I don't know if that makes a difference to DOR. So we're going to track that down. But Andrew, just is that the appropriate rate? 7.75% sales tax
for arrangements? Yeah.
Yeah, for arrangements. Okay, another question: would an inoculated mushroom log for people to produce their own mushrooms at home be taxed at the higher rates? We do see people selling like mushroom kits, mushroom logs.
Good one.
Yeah, that's an interesting
Good
one.
one.
Because that's food.
Food. It's food. The log itself is a vehicle. I'm just applying the logic model to it, that if the log grew on your land and you inoculated it, you cut it and inoculated it. To me, I don't know what the distinction there between that and firewood would be.
But yeah, would you look at the ultimate end product though? Because that's what.
Well, again, I'm sort of equating, I'm not worrying about in that scenario, whether it's food or not food. I'm thinking about it as something that's produced on the farm.
All right.
So the 2%, yeah, it's not food because
Yeah, not yet.
it's spores, it's not food.
Mm-hmm.
That's a good one. That's another good one. Yeah. I'm
Another
using
email?
the firewood analogy, but again, I don't know if I'm right or not on that, but that's a really good one.
Dehydrated food product is subject only to 2% sales tax, but not state tax.
Yeah, I
And
saw look at that question. That's why I just looked up dehydrate in the manual, and here's the only place that it shows up. Excuse me. In the manual, it doesn't say that that dehydration has heat applied, makes it prepared food, but without seeing that word anywhere else, I can't answer that. It's a really good question, but if dehydration makes something prepared food, then yeah, it's the higher tax. But I would say this, that dehydrated food, single ingredient, nothing else added to it. I think probably that is 2%. I think probably that's 2%.
And she also asks, is county sales tax submitted to a different place than state sales tax?
No. No, but good question. I flew past something really early on. If you are, and this is something that was pointed out to me. In Mecklenburg, Wake, Cumberland, he didn't mention Durham, didn't mention Asheville, I'm sorry, Buncombe, or New Hanover, any metro county. But just know that there may be, and I know for certain in Mecklenburg, Wake, and Cumberland, that there is a little 1% tax that's administered by, again, it's for prepared food. So this isn't going to apply to those of y'all selling the raw products, but I wanted to point this out. But this is the only place that I would say that has a different portal to remit tax, and that's again just going to be on prepared food in those counties, and it's run by the property tax office. But I think in answer your question, no, you're not. You're submitting it to one place, and either the state sending the county their share, or vice versa. It's up to them to divide it up.
Okay, a couple more questions. Wouldn't a mixed flower bouquet essentially be the same as a salad mix of lettuces? I can sense the frustration here.
My simple answer would be that it's not food.
Right.
But I'm there now. I'm saying that it's taxed because it's food. The issue there is produced by its producer, sold by its producer.
Well,
So
yeah.
I
guess the question is, why wouldn't they be treated the same? They're both produced by the producer, even of course one's edible, one's not, but yeah.
I don't know.
And then the last one is, I'm sorry if this has been answered, but the type of tax is a value added product subject to, like jams and pickles. Just needs that to be repeated.
Heated. It's heated.
No, the type of tax when you've got full. Okay, full tax.
That's a question based on the logic. You've applied heat to that product.
Okay. Do you use the county tax rate for the county that your farm is in, or the county where the sale is made?
The sale is made.
That's a good question.
I had an answer.
Huh?
I said I had an answer. That's awesome.
Okay, that's it for the questions for now.
Okay, that's our so far.
The last round.
Okay, here's where we go so we're switching now. Here's where we do our big switch from what you're collecting to what you may not have to pay when you're buying stuff for your farm operation. Debbie will also give you this link too, but I linked to, I'll just pull it up. NCDOR has everything you need here. What I'm gonna do is just explain it as best I can. This is the qualifying farmer certificate. And I was requested, because I used to always call it the qualifying farmer exemption certificate. It's the certificate number. That's really what you're getting. You're just getting an identification number that is going to be this QFC thing. And again, no payment of sales tax on allowable farm input purchases. It's not limitless, even though it's something that is of use on your farm. So, so these are some examples of things that you would purchase from a vendor that you would not be having to pay the sales tax on. You can see it's big items and small items. Applies to fuel, applies to electricity. And so containers, when you're buying, if you're a nursery and you're buying a container, a question came in before to either me directly or Debbie, I think to you about, I'm in Western North Carolina and I'm crossing over into Tennessee and buying pots. I'll get to the issue there, but this is just, again, I just handpicked a couple of items and threw out there, but just to give you a general idea that these types of things that you're buying, and let's see if this is a good link here. Said page 108. More and more these days, folks, if you're seeing me do a live presentation, this is kind of what I'm doing out there. I'm pulling up statutes and we're all reading it together. So here you go. Yeah, good. So this 27-5, examples of items sold to qualifying or conditional. I'll get to that. But here you got it: balers, calcium chloride, chainsaws, combine. No. It's just like you see all this, all these items. I don't see the word computer in there, even though that's something we use on our farm now. And Debbie, while we're on it, I have my little sticky here, and the person who asked this question actually encouraged us to address this. Repairs to farm equipment. A specific question raised, well, what about my farm truck?
Mm-hmm.
The answer is that if your vehicle that you're repairing is over the road licensed, somebody's gonna, now I know what the next question is, but what about a trailer? Let's just say repairs to a truck and leave it at that. That is over the road license, meaning you have your registration with DMV. That repair is subject to sales tax. Your qualifying farmer certificate, even though you have that number, you still have to pay sales tax on that repair to that truck. For repairs to tractors, that's fine. Those are not registered with the DMV as over the road vehicles, although of course we drive them on state highways to get from field to field, but nonetheless, service on those types of that type of farm equipment, the tax on the service is going to be exempt so long as you have this this number. So, but anyways, this is giving you an item of what can be exempt, of what's not exempt, things like this. And so it's not everything you use on the farm. So I would say this is your go-to list on how you would classify something. And again, where you're buying it from, generally, they're going to know, because they're a business that if they're not paying their sales tax and they get audited and they have a huge tax bill, that's the worst thing that could happen to them. They're going to get shut down. And so they are probably very much up on what the where you're buying things, what the qualifying farmer certificate gets you, and when it exempts you from sales tax and when it doesn't. So, but that's your go-to source there. So the requirements for this are, and this number changed, I think it was in 2014 it changed, maybe 2010, sooner. But it used to be that if you could show that you were selling $1,000 gross in your farming operation over a period, the 3 preceding years, income years, then you could qualify for this sales tax, the exemption number, the QFC number. That changed. The legislature upped that to $10,000 gross. And that will raise an interesting issue here in a minute. But what you were showing, what you have to show NCDOR, is that you've been in business for 3 years, and each of those years it's averaged over the 3 years, but the average comes out to $10,000 per year. And again, pulling out your golden ticket, the Schedule F, we're not questioning the veracity of it. That's the gold standard for proving your income. It's not the required proof. You could have sales, you could have other records that show your sales, and NCDOR would accept those. But to my mind, the Schedule F is something you're doing anyways. But again, average of $10,000 over 3 years. And so it's not necessarily the qualifying farmer certificate is not for the startup. There is though. There is though. Let's see if I need to yeah, I'm sort of repeating some things. There is though this the statute that authorizes the Department of Revenue to offer this exemption to qualifying farm operations. There's this thing called a conditional farm exemption certificate. Here I don't have the link for the E59QF form, but this is it. Just Google that, and that'll come up. And I'm sure that I might have a link here in a minute, but Debbie will be sending that out with the resources follow up. But that's the portal. That's the portal I just pulled up here. You'll find there's the application. You can pull it up. There's the application. Pull it up, and then you go through and you fill it out and submit. So that's what it looks like. This conditional farmer exemption. So let's talk about that for a second. It's just another form, it's another application, but this is for you as a startup, where you don't have that 3-year, 3 times $10,000 gross track record yet, but you're pretty confident you're going to get there in pretty short order, or you're at least going to get there in the time that that you would otherwise be required to have it. The challenge is that you've got to get there. If you don't get there, there's a 15-year bar on you being able to get a file and get accepted a new qualifying farmer application. So it's a bit of a risk that you take. Not knowing whether if you're going to make it to that point, or something happens and that you're forced to stop producing, or things happen. Just know that this nuanced minor little thing in our big discussion here, there are consequences to that. What's the ramification that if you go for this and you don't qualify, you have to pay the back sales taxes for the things that you didn't, for the sales tax you didn't have to submit to the vendor. And so just know what those risks are. Do you get thrown in jail? No, just means that you're not going to be able to get a QFC for a long time yet. This isn't in the statutes or anything, but I wanted to point this out here. It's a related topic, but in a different presentation at a different time, we would be talking about bona fide farms and zoning. When the county can't tell you not to be farming in a certain area, not to be selling livestock, not to have a roadside stand, things like that. Generally, if you are doing one of four things, and it's not an exhaustive list, but one of the things on that list is that if you are the holder of a QFC number, then you are automatically considered a bona fide farm in the county, not the municipality, but the county. It cannot tell you that you're doing something in an area that's zoned residential or commercial or some. You're able to be to freely farm in those areas that doesn't include farming as an enterprise. County zoning codes don't really include farming as, you know, an allowable use, because this is taking its place. Where I'm getting to with this is that the conditional exemption certificate number, if you've gotten that, the county likely won't accept that. I just got that from a message board. I saw an email. The counties were asking each other. Reason being is because you could easily fail and not have that exemption number. And so the county doesn't want to go ahead and say, yep, you're a bona fide farm, and we're going to leave it at that. I guess it's a designation. It's just harder for them to undo. I don't know, but that different discussion, the bona fide farm, that becomes relevant when you're talking about building permits and things like that. And so another time, excuse me. Let's see here. More just requirements. Again, it has pretty strict requirements. You've got to, again, it all goes back to documentation. The proof is on you as the holder of the number. And so you've got to keep that list. Again, as I mentioned at the very, very top of this time we're here together, that there's the reality versus the versus what's authorized. And when I say what's authorized, that's what I'm getting at here. I'm saying technically NCDOR can do these things. I put down here, because I got into this discussion with the fellow over at NCDOR. He said, hey, I noticed you had this, you know, $250 thing down here that if they misuse their certificate, there's a penalty. It's on the books. Do they say they enforce it? No, because they don't really look at this thing as something that sometimes, and there has been documented fraud, but in most cases, these are just mistakes where the tax is not collected or not paid or something like that. And so I only put it in the slide because it's a technicality, but you want to be qualified that that's not something they really, you know, go after you with. Another relationship between the QFC and zoning. I want to put this out there because it's you know, this is what it shows up in the statute, that if you're using a building on the farm for agritourism, it will be automatically considered a bona fide farm purpose if it's built on property that's owned by the person who holds the QFC. And the reason I grade out all this other stuff is because that's, you know, that's for another presentation. I just pulled this slide out of a presentation on bona fide farm zoning and building permits. But if you have one of those, then it's also sort of a ticket to, if you're having weddings and doing things like that, that again, that's going to be something that's automatically brought under the guise of being a bona fide farm if you hold that QFC number. There's other ways to qualify for it. I mean, you have the PUV program too, but just so I just wanted to illustrate how sometimes in our statutes, a lot of these little things are connected, and this is particularly true in farming. Sometimes things aren't connected, and we have to try to make that connection. Was my comment on what they call the streamlined states. This is a new concept to me, but it's like, oh, okay, makes sense. 13 states have collaborated to have the same definitions, like that food definition that I showed you. And what this is essentially doing is, in different states, they're usually using essentially the same definitions for these items. Now, I haven't looked up this, I haven't looked up the definitions in, say, Tennessee, Virginia, and South Carolina on this. What I would say about this, and this is going to a specific question that nursery operator from out west asked. Said we buy our pots from a retailer over in Tennessee. Your North Carolina QFC doesn't work out of North Carolina. It's only going to work inside of North Carolina, but you are, and this is an assumption because we do this for farmers in Virginia, Tennessee, South Carolina, and wherever else. Those farmers in other states can get a North Carolina QFC number. They have the same revenue requirements. And so it's not going to be something that's tied to anything that a farmer here would normally have. And so, so my understanding is that if you're wanting to, that if you're getting, if you're going across state lines and buying things and looking to, not pay the sales tax, then you're going to, you can go through that other Department of Revenue in that other state, fill out an application, get a QFC number there if that's something you're regularly doing. But the states aren't required to honor each other's QFC number, if that makes sense, but they are using common definitions. One of the issues related to that question is that, so let's say that you're buying you're buying that pot in another state, and you're having to pay the sales tax on it. My understanding is that what you will get is a certificate of resale, which you have to keep in your records, but that will show, I think that demonstrates that you don't have to, something related to reselling that pot. You're not collecting sales tax on that resale. But I linked these here, and Debbie, this is the QFC is also, like all the stuff are emerging for me, but the there's this handy application on this streamlined sales and the certificate of exemption. So what this is just the same. This is just a standard form, but again, they call it streamlined because it has common definition for the other states. So let's see. Yeah, this is the scenario I was talking about. Again, and I think Debbie probably broke it into two slides for y'all. But I tried to supply a little bit of an answer here on that, because again, it's a new scenario, something new to think about. And also on this, this is where I mentioned what is the recommended notation for recording? Somebody asked this question, tax deferment. This is not, these are exemptions. They're not deferments. A deferment is generally referring to a tax that you will pay in the future. It's just you're deferring it and getting the present net value of your money by not having to pay it today. And so this isn't a deferment, it's an abatement. You don't have to, it's an exemption. You don't have to pay it. We generally refer to your ag use property tax as the deferment because it's only deferred to such time as the land no longer qualifies, and it'll have to be paid back. So, so anyways, I put that video on there. That's something that looks like it'd be helpful. Again, these questions I think have been a lot. It's really all been, I think everything here. This I found interesting. Ceramics from clay found on the property. Something tells me, Andrew, that's a full taxed item, but clay that's mined from the property. It's not food. We're not worried about whether it's prepared or not. It's something that has fire attached to it, but it's being sold by its producer. So I don't really know the answer. That's a good one. This last question here, is there an acreage minimum maximum for agricultural status? Not tonight, not with sales tax. That is purely a property tax question. And then under our North Carolina present use value system, again, another webinar, different time, that is, that's going into whether or not your land is of a sufficient size for you to qualify for a lower payment of property tax based on your use of that property. But for this, there's not, acreage doesn't factor into it. You can have a 1 acre garden, quarter-acre garden. The issue is commercial sales. That's what our measurement is tonight. Dollars that you're bringing in for things that you grow and sell. And with that, there's my email address and me when I was much younger. Questions, comments?
We do have a few questions, so hopefully we got about a little bit less than 10 minutes. So hopefully we can move through these pretty quickly. What if the product, the value added product you sell is sold and shipped out of state? What tax applies?
That's a great question. The issue there is whether it's the North Carolina state tax, sales tax law controls, or the sales tax at the point where it's being received. Please email that one. That's a good one. E-commerce is like the next level of this stuff that we sort of need to start digging into. Sorry, I can't answer that directly.
What about commercially built buildings for maintenance and repair of equipment, and buildings for maintenance of animals, like quarantining sick or new animals to the farm?
As in the purchase of those buildings, the material?
That's all I got. I'm not sure what the question was exactly.
Alan?
Alan, you want to speak up? I'm not sure what your question is. And buildings.
Like what he's asking. I am looking at my list, which is being shared here. And I'm just looking at all these little different things, and I'm not even seeing greenhouses. That would seem like something that should be on there.
I guess it came when you were talking about, maintenance and repair. And is that exempt? I don't know.
Again, I'm looking at the list here. And examples of items subject to the general state and applicable rates in sales and sold at retail to qualifying conditional farmers. Drainage tile. Like, I'm not seeing anything in here. Example B, examples of commercially manufactured equipment, parts, accessory equipment that are exempt. So again, I can't fit that in there either. So that's a good question. It's a good question to ask in NCDOR.
Okay, should he contact the NCDOR then for that one?
Well, sure. That'd be a good level 3 question. For them. If you want to route it this way, that's fine too. Because I'm interested in that answer.
Okay, so email Andrew. I'm going to keep plowing through these, trying to get through these. Is it possible to get the exemption as a new farmer just starting out before you are able to start selling what you intend to produce?
Yes.
Okay. How do you claim the tax exemption at the retail store? Do you carry a certificate from the state to show the store?
Yes. You'll have your I'm not sure what it looks like. What I've always understood is that I think the store can probably look it up. In this day and age, I think the store can probably look it up. The way 10, 15 years ago, we're talking about this sort of thing, that somebody'd say, oh yeah, the southern states, they have a card box and it has everybody's, little number in there. I think we're probably beyond that at this point. So you'll have it, and you can show it. What the store does to verify it, I don't really know what that looks like. That's a good question, but I have a feeling that they have a way to verify, or even a way to look it up. I may have gone
Can I
way.
speak to that?
Please, yeah.
Yeah, so I have one of the conditional farmer exemption certificates, and what they have you do is that streamlined form. You take that into most of them, you show that to them. Sometimes they have it in the store, like blank copies, or you can do your own. Just fill in the blanks of that streamlined form that you gave or that you showed earlier, and then you show them that copy, and they'll usually either keep a copy or have you complete a new one. And then from there on out, you're usually pretty good once they have that hard copy with them.
Thank you.
Andrew,
Thank
can
you.
you stop sharing your presentation, please? That way we can see
Yeah,
the
that's enough.
people. Thank you. Okay. Uh-oh, now I lost the chat here. Hang on. Let's see. Okay. Can you tell me what required documentation you're referring to on slide 38 when it reads a person issued a conditional farmer must submit the required documentation to the department within 90 days following the end of each income tax year covered by the CF?
You got to show them each year. You got to keep renewing it.
But she's asking me what the required documentation is that you have to show them.
Oh. And I have this on the conditional slide. Whatever it is they ask for, it's proof of income.
Okay. Oh, Schedule F.
Yeah, Schedule F.
Okay. When you change
So-
from
Oh, sorry. Can I just ask? That was my
Please.
question. I just want to make sure I'm understanding. So you're saying that's not for the conditional, it's for once you're qualifying. Is that correct?
Well, I threw in once you're qualified statement, but I have it here on the conditional because you've got to substantiate your income for that. When I said that you have to renew your number with NCDOR, I'm not quite certain about that. I wish I'd looked that up and had an answer for it, but I mean it's what I'm saying there is that if they're asking you for information, you've got 90 days to give it to them.
Gotcha. Okay. Because I hadn't read anything on the condition. I know, like, in order to go from conditional to, I think, qualified, yes, you have to show them that. But I hadn't heard anything about needing to do something during those 3 conditional years. So that's all I was asking for. Thank you for clarifying.
when you change from conditional to a permanent sales tax exemption number, how long do you have to notify vendors of the new number?
I don't think there's a time on that. Not to be nitpicky, but the word permanent does not apply here. This is something of continual qualification.
Yeah, that's a good point.
But no, I mean, it's not necessarily there's a time limit that you have to, because it's purchase by purchase. You either have the number or you don't. And so that's when to my mind, that's when the vendor knows, is when you're purchasing something.
So a North Carolina QFC would not work for purchasing seeds online?
Sarah, I don't know.
I would probably call the
Yeah.
company.
Yeah, it seems to me that under this, again, going all the way back up to the top with the Supreme Court case, it's North Carolina that's, it seems like North Carolina law would apply in that circumstance. And if you have it, then the out-of-state company would be honoring that. But this is how I talk when I'm trying to think something through logically. It doesn't mean I'm right.
So some people are chiming in here. Some people say you fill out the form for each store. It does work for out-of-state seed stores. It works with Johnny Seeds.
Good.
And other companies. So
Thank you, Kathy. Yeah. Okay.
yeah. And somebody said our local feed store wants a copy of the certificate and keeps it on file.
Okay.
So we are pretty much at 8 o'clock. And so I thank you, Andrew, for sharing your experience with us and for checking with NCDOR on this. And y'all have his email. Poor Andrew might be getting a few emails after this, but he's great at clarifying stuff and following up with people. And I think it helps him too, because he likes learning new things.
That's really what it's all about, is me learning.
I know, both of us, that's, in our job, we're always learning when y'all present us with challenging questions. So appreciate everybody coming. And like I said, look for an email from me in the next day or so with a recording if you feel like you missed something. There were, go go back and listen to the webinar, look at your presentation, and hopefully that'll be helpful. But y'all have a good night.
Thank
And
y'all.
we will see you next time.